Welcome back, everyone. Please welcome our next presenter. We have Grid Metals Corp. It trades on the OTCQB under the symbol MSMGF and on the TSX under the symbol GRDM, and is an exploration and development company that has three key projects focused on nickel, copper, and platinum group metals. Please welcome President and CEO Robin Dunbar. Welcome, Robin.
Thank you very much, Anna. Pleasure to be here today.
All right, we look forward to your presentation.
Thank you. Yes, good morning, everybody. My name is Robin Dunbar, and I'm the president and CEO of Grid Metals. And today I'm just going to give you an overview of our company, which is a junior exploration company. We're based in Canada with our projects in Canada. And we are focused on nickel, copper, and platinum group metals, which are really critical metals that the world is going to be needing in the coming years. I'll be making some forward-looking statements, and this is our disclaimer. Just to give you a little overview of our company. So we have three key projects in Canada, and really our goal with these projects is to take what are grassroots and more advanced stage projects and advance them, add value, and translate that value into growth in the share price and the overall valuation of our company. And to do this, we have assembled a portfolio of properties that's been many, many years in the making. So our company's been around for 20 years, and we've been working on some of these projects for over 10 years, on and off. But I think one of the key things right now is that the environment for companies like ours is turning more and more positive every day, and this is really based on kind of international trends that we're seeing for metals, which are going to be required going forward in the clean tech space. And by clean tech, I mean the transition away from the fossil fuel economy, which seems to be rapidly accelerating around the world. So the projects we're focused on are all located in Canada. You can see the location there. We're just north of the U.S. border, and we have three properties. One is a nickel property called Bannockburn, which is a project, and I'm going to get into a little bit about each project, but Bannockburn is what we call a bulk tonnage nickel target. And so we're looking for large, low-grade deposit of nickel. Then we have Eastpole Lake, which we believe is the top-ranked palladium exploration property in North America. We have a large land position there and some really excellent results to date. And then over in Manitoba, in central Canada, we have the Makwa-Maple project, which is an advanced stage nickel, copper, platinum group metals project. And there we have a resource of metals of about $3.5 billion, and we're in the study stage. So we are moving that project towards feasibility to ultimately show the economics are favorable for a mine. In terms of the company, the key management members are myself, and my background. I'm a MBA from Dalhousie University in Eastern Canada, and I've been in this business since 1997. I'm currently also director of a company called McEwen Mining, which is a gold mining company based on, they're listed on the New York Stock Exchange, and they have international gold assets. And I was also, importantly, a director of a company called Western Areas Limited, which is a Australian Stock Exchange listed nickel producer. And I was with them for 10 years, and they're still a significant shareholder in our company. Just over a year ago, to head up our technical side, we added Dave Peck. And Dave is one of the leading geoscientists for platinum group metals, really in the world. He's got a really extensive resume. And he was with a company called North American Palladium. And that company was acquired in a $1 billion takeout by Impala Platinum at the end of 2019. And Dave came and joined us after that. Prior to that, Dave had experience with Anglo American. So he ran their nickel exploration group globally. And that was really, his job was really scouring the world for new potential nickel projects. So Dave has really seen a ton of interesting projects around the world. Anglo, I think it's safe to say, is looks at everything and looking for world-class projects. And Dave also spent time with Anglo American's Platinum Group Metals Group, which is a producer of platinum and palladium in South Africa. And Dave's a PhD in geology from Melbourne University in Australia. So Dave and I are the key kind of senior management. Roger Roden is our CFO. And we have a small team of core employees that have been with us. And we extensively use consultants for our drilling, exploration, geophysics, and market relations and that type of thing. So we have a long experience of being a nimble operator in this business. In terms of the metrics of our company, we have about 93 million shares outstanding. We just completed a financing, so we have about $5 million in the bank. Market capitalization still pretty small, $22 million. And we think this is an exciting period for our company going forward. So we're really poised to take advantage of what's happening in the markets. And just to give a sense of the backdrop here, the metals business is a very cyclical business, and we've seen ups and downs over the years. But the real drive right now is the shift towards reducing carbon emissions in the world economy overall. And so this is the transition to new technologies such as solar and wind, electric vehicles, and all related technologies, which are really focused on lowering the carbon footprint. And this type of transition, it's a major technological transition, which is occurring, is going to need a lot of metals. And that is a trend which is starting to accelerate. And the transportation is a very important sector. About 20% of global emissions roughly come from tailpipe emissions. And so places like Europe and China are much further ahead of North America in terms of adopting electric vehicles. These electric vehicles, they're particularly the batteries, use large amounts of metals. And as a result, new supply is required for many of these metals. And there's been a fairly prolonged period of about 10 years where there hasn't been the amount of investment for new mining projects. And mining projects take a long time to bring to market, as much as 10 years. And all of a sudden now the mining industry is becoming very keenly aware of the need for new deposits and more investment. So we see this in manifesting itself in things like Tesla's battery day, and where Elon Musk is saying, we need nickel and we want more nickel and we need lithium and all these metals which are going to be required for the ramp up in the number of electric vehicles in particular. So this is a great tailwind for us in terms of now increasing in the investment interest in the metal sector. And a good analogy for me was in Canada, they legalized marijuana a few years ago. And in the run up to that, there was tremendous investment and investor interest in the whole process of marijuana legalization. And there was really fantastic and outsized returns in the sector. And so a similar phenomena we see developing in the future with the rise of interest in this global trend towards electric vehicles and other green technologies. The charts I've shown on this slide are on the left is the Bloomberg estimate of the rise of electric cars globally. And this chart would show that the market penetration for electric vehicles will be about 35% of all new vehicle sales globally by 2040. And for those of you who don't know, like roughly there's about 100 million cars sold every year in the world, which goes up a little bit each year generally. And for this type of growth in electric vehicles, we see that the demand growth for the metals that are used in the batteries and in the electric vehicle itself are going to grow dramatically. So the chart on the right we see some of the metals like lithium, for example, for the amount of cars, electric vehicles, and the batteries, the size of the overall size of the lithium market itself is going to grow more than 10 times. That's the total current market. Has to grow 10 times to meet these projections. And we see some of the other key metals that are outlined. Now, the nickel market is a much larger market than lithium in terms of dollar value, but still there's going to be a huge demand growth in nickel and copper and other metals such as cobalt. So this is a very significant trend that is starting to actually accelerate right now. In terms of the backdrop of grid metals and where we are, one of the major shifts we see as well is the shift towards ESG, which is environmental, social, and governance. So the big auto producers want to see that the metals that are going to be supplied are going to be provided by companies that are operating in an environmentally sustainable manner. And this is very important, and that have good local relations with the communities, and just are operating in a very overall socially responsible manner. So Canada, being U.S.'s largest trading partner, last year signed a very important agreement, which the U.S. had identified about 30 critical metals that it wants to develop to be more independent of places like China, which are major suppliers of certain metals. And the U.S. and Canada signed an agreement to kind of team up that to identify these metals and that are going to be required for their consumer applications, industrial, and also military. And there's the basic agreements that the two countries are going to collaborate on this. So this was brought in under the Trump administration, and it's really, Canada is going to be part of the U.S.'s push towards becoming independent in metals and not reliant on other maybe less friendly countries than Canada. So this is a great development for companies like ours. We operate in close proximity to the U.S. The U.S. is a much larger market and a much larger source of capital. So it's great to be kind of part of the North American push here. And, we see that our location in Canada is excellent. There's a great capital market structure in Canada for us to raise money to develop these projects. And we see that there's going to be competition for these mineral deposits going forward. And the two of the key metals that we're focused on being nickel and copper, they're really key in the EV metals. Copper is a much larger market, but the slide on the left I put up to just illustrate the amount of copper demand that's going to be required in things like solar, wind, electric vehicles, and that is going to again increase dramatically. And again, nickel demand from the battery sector is set to surge as well. So these are the two deposit key metals in that we're looking for. And we think the demand background is really good for those. Again, the electric vehicles is going to, we're going to see significant demand in the battery growth. And this is going to come from, right across the board in terms of, plug-ins, fully electric vehicles, hybrids, but also commercial truck and bus growth as well. The other metal that we're looking at is palladium. And I put a price chart on palladium. It's been the best performing metal of all the precious metals and base metals in the last 5 years. It's extremely valuable. It's scarce. It's used. Its key use is in auto catalysts, and that is reduces pollution out of the tailpipe in the internal combustion engine cars. And this metal is running a deficit. The world supply, a lot of it comes from Russia and South Africa. And so we think that there's a real demand for good projects in North America. And the last two producing mines in in North America have been acquired by South African interests. Sibanye-Stillwater, which is based in Montana, was acquired for over $2 billion US, and then Impala was acquired for $1 billion, as I mentioned earlier. So I see Dave Peck's joined us, and I'm just going to hand it over to Dave. And Dave, I guess you got about just under 15 minutes to give an overview of our projects and why we're really excited about those. Oh, Dave, I think you're on mute. Well, why don't I go ahead until Dave sorts that out? I guess we're on a different platform here. So our most advanced project is our Makwa-Mayville project, which is located in Manitoba. And this project is our most advanced project. We have two deposits, which are located about 20 kilometers apart, that have about $3.5 billion in resources at current metal prices. They're contained in two open pits. And the payable metals there are nickel, copper, platinum group metals, and cobalt. And we have done extensive metallurgical testing on the ores from these two deposits, which show that we can produce saleable nickel and copper concentrates, which is key in the development of these projects. And we did a scoping study back in 2014. And what the makeup of this mine is to put a concentrator, which will process the ore up at the northern deposit, the Mayville deposit, and that would process both of the deposits. And we just recently signed a new agreement with the local First Nation, and we're now moving ahead with engineering studies on this project. And we want to move this project towards a feasibility study over the next couple of years. And, this is we control a significant belt here of about 30 kilometers of prospective rocks. We have a number of new discoveries there, lots of exploration potential, and a pretty sizable deposit. So on our scoping study, this project would spit out about $600 million in free cash flow over its 14-year life. And we're working on getting that to over $1 billion. It's one of the very few projects. Mayville is a copper dominant project, and we have about 300 million pounds of copper sitting in the Mayville pit, which at today's prices is worth about $1 billion US. So these projects have been drill defined or ready to go, and we haven't worked on these for a few years because we were working on our permitting and other things and some exploration in Ontario. But these projects are very rare. This capital cost approximately for this project will be about $250 million. So it's at the low end of the range of North American base metal projects, and we're pretty excited about the potential of this. And lots of news to come on this project going forward.
I'm back, Robin.
Okay, Dave. So let me hand it over to Dave, and Dave, you can just take it from here. Thank you.
Yeah, thanks. Good morning, everyone, and apologies. Every technical difficulty known to man happened to me last 20 minutes, but we're good now. So thanks for the invite. We're going to talk about Bannockburn and then Eastpole, the last two assets that Robin had introduced you to previously. Bannockburn is our Timmins area nickel project. We've had the project in the company for about 20 years. But what happened recently in the area, a very large resource was delineated by a company called Canada Nickel. And they're just north of Timmins. Their project is called Crawford. And they just filed a PEA, and the economics look interesting for sure, a big scale. We're looking at a slightly different tactic. We have the same style of mineralization. We're still at the exploration stage, so we're probably a year behind them. But interesting, if you follow the growth in their market cap over that 12-month period, they've gone from where we are now to over 300 million market cap based on that resource. that they put on the table, and now the PEA, and they're launching a PF or a feasibility study now. So we'd like to some extent, sort of follow in their tracks. I think this is a new style of nickel mineralization. It's not conventional nickel. So there's a little bit of a learning curve here, and some duty for us to inform the investors of exactly what we've got. But this cross-section shows you that this is a very large target. These are the yellow bars are the nickel assays on the drill collars. We've got about 10 holes across what we call our B zone, and our B zone is analogous to the Crawford deposit with similar grades and thicknesses, but we've only got 10 holes in it. So we're addressing that now. We're drilling to get to the point of making a decision. Do we have a resource of similar or better quality than Crawford? And if so, we will launch into a resource delineation program. The other advantages we have compared to Crawford, we've got a higher grade core that was intersected in historical holes, including up to 10 meters of almost 0.66 nickel, another 25 meters of nearly 0.5. If this core zone holds together, and that's really the target for us in this program, then we've got the advantage of being able to do a smaller pit with a much higher grade and much better margins for a future mining project. So that's our focus. Stay tuned. We'll have some news out on that in the next month or so. Initial results will be coming in. We're on our last hole now, so the project will wind up this first phase of drilling in another week. We also have massive sulfides, typical conventional Kambalda type Western Australia style massive sulfides in the 1 to 3% nickel grade with cobalt and PG credits. And we've got 3 of those zones discovered already, and there's lots of exploration upside on those. So the combination of potentially higher grade massive sulfide feed as a starter and getting into the bulk mining in an open pit for this disseminated or Crawford style is really what we're focused on at Bannockburn. The final area of interest in this talk is our Eastpole Lake project. We've focused on this in the last 12 months as a company. A lot of our exploration investment has gone into Eastpole Lake. Obviously, with the really strong palladium price, market fundamentals, this is a good commodity to be in. There's not a lot of competition. We believe Eastpole is the best exploration stage palladium project in North America, and we're on our way to proving that. We've had 3 successive short drill programs, about 30 holes in the last year, and we've consistently discovered the same mineralized unit, which is called our basal layer. This map shows the size of the property. We're 80 kilometers west of Sudbury, so we're again, like our Bannockburn Timmins area project, in an established mining district, great infrastructure, great road access, lots of smoke on the property over 20 years of work, showing this surface mineralization extends basically across the entire 20-kilometer length of the Eastpole Lake intrusion, the host to the deposit. It has similarities to the Platte Reef, to Lac des Iles, where I worked for many years, and also to Sudbury itself. We're starting to see some massive sulfides in the footwall to the main target, which is our palladium dominant disseminated mineralization. We focused on the Parisian Lake area, but we have many other targets to go after here. So what we're looking to do is establish initial resource here over the next 12 months. The first step towards that is to define the potential of these multiple targets. All of them have the same characteristics: good geology, outcropping mineralization. What I'm showing on this map is a map of the geophysical properties, the resistivity, and we're finding a great correlation between the mineralization and resistivity anomalies in the darker colors here, the blues and pinks. So I've outlined a number of these targets. Parisian Lake delivered the goods. We had a great discovery hole late last year, 119 meters of 1.1 palladium equivalent, and that's about $100 rock in the ground value. And so that's kind of what we're looking for pit in terms of thickness and grade. And we've got mineralization on many other targets here. Some of them I've put some highlights from historical work. So we've got a wealth of targets. We've got great indicators. We've got multiple styles of mineralization, and I think we're off to the races here. So our next phase of work will start in August with another drill program, starting to look at the potential of these other targets. And then we'll make the decision which one or multiple ones we want to start resource drilling on, perhaps even later this year. So that's sort of it on the technical side. Robin, do you want to wrap it up?
Yeah,
Okay.
just, I've put a slide together with some of our comparables in the space. And, we're trading at a much, lower multiple for the amount of metal that we have in the ground in terms of our market cap. And this was based as at the end of April. So you can see some of the companies that are around the world and in North America with the billions of dollars of metal and their market cap and the multiple of that. So we think we got lots of room to grow. We've got a lot on the go this year. We're going to have steady news flow. We think all these projects are really worthy of, world-class potential. And this is the last slide I want to leave you with is, where we think GRID is in terms of the overall exploration. And this is the Lassonde curve, which shows, the potential for increased value and stock price. And this really comes from, when a company is, drilling and making discovery, that's really the best time for investors when the stock price can go up the most. And, we think we're about here. And really with our projects, we've already shown, pretty good results to date. And, we just feel we're going to have better results to come. And, we think all of this is backstopped by our Manitoba project, which has, $3.5 billion of metal in the ground. And that's something which is really more over in the mine development stage, but provides, a lot of value for our investors. So, in 2021, we're going to have a lot of catalysts. We have 2 projects at the discovery drill phase with lots of results coming over the next number of months and potential for, more discovery in the company and, positive and responsible development of these projects going forward. So that's it from us. And we really appreciate the opportunity to get the story out. And if people have any questions, feel free to contact us through our website at any time. Thank you very much.
Thank you, gentlemen. We do have quite a few questions from our viewers, but we will send them directly to you because our time is up for this presentation. But please join us again because it's really great information. You guys are doing great work.
Yeah,
so thank you so much for joining us.
Thank you.
Thank you.
All right, everyone, remember.